traders all around the world. This is FXPassion broadcasting you live on YouTube, and this is Forex Trading Course 101. Remember the three pillars. We are trying to build a strategy and or a system. In the past week we learned about how to build a strategy, right? We talked about, and in this week we are learning about crowns. What is a crown? What is a crown reversal? And we are also trying to understand how risk management applies to our strategy and system, and the big one, right, the psychology part. If this is your first time, everybody, we are in the intermediate module. Hello, time to shine. And we are past over multiple time frames, Fibonacci's, and the news trading. So when we are done with crowns, everybody, we are going to jump to the advanced module, okay, where we are going to talk about MACD, Stohastic, moving average, and so on and so on and so on. And remember, 90% of traders lose money in the Forex market worldwide, and the webinars are not investment or trading advice. Hello, Miguel. The webinars are for educational purposes only. Hello, Akos. If this is your first time, everybody, and the webinars are difficult for you, please go back on the Stohastic YouTube webinar page and start to watch Forex Trading Course 101 starting from lesson 1. Okay? And for homeworks and or questions, you have my Gmail contact, and you have my Skype contact, and also my LinkedIn contact. And happy Friday! So that being said, everybody, let's dive into the live markets, and let's open a new chart, right? Let's open a new chart. So this is from the news trading, and there you go, AUDJPY daily chart. Okay. Now, some of you send me emails and on Skype, and the majority of you, everybody, were, this would be the example, okay? This would be AUDJPY, and some of you draw a crown reversal, something like this. You would put your drawing tool here, and this would be the low, right? And this would be the center tip, and this would be the high, right? And I said to you, no, this is wrong. Well, why is wrong? Because the crown, when you are looking at crowns, everybody, all the points of the crown must be linked or to a high, which in here is not, right? Remy, are you in the webinar? Remy Shio, are you in the webinar? I think it was you. So you cannot draw a crown reverse like this, everybody. You must connect the lines with the highs or the lows. Okay? So very basic stuff. You have a high, you have a low, you have a low, then you have a higher high, higher low, higher high. Okay? So when you are connecting the lines, when you are drawing a crown or a crown reversal, this must be a high, right? Center candle, 2 candles on the left, 2 candles on the right. This must be a low, center candle, 2 candles on the left, 2 candles on the right. This must be a high, 2 candles on the left, 2 candles on the right, and a center candle. This must be also a low, center candle, 2 candles on the left, 2 candles on the right. Now this must be a high, and this must be a low, and in the end this must be another high. Okay? Now, today we are going to talk about, everybody, yesterday I was showing you when crowns and crown reversals appear. Today we are going to talk about how to trade the crown reversal. Okay? So, and we're going to delete. And these rules, everybody, apply on all time frames. Okay? Of course, the bigger the time frame, the more relevant the crown. Okay, so let's write this down. Rules, if you want, rules for trading the crown or reversal. It's always the same. Okay, so we are going to have number one, trend line break. Trendline break, number one, trendline break. So I'm going to delete this one. So on any time frame, it's just an example, the market is going to make lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, right? And we are going to monitor the price action, the movements, right, with our trend line. And of course, one trend starts from the other, you know, it's just an example. And the number one is going to be the trend line break. Okay, and number two, a trend line break is not enough. Trend line break number two, when the TL trend line is broken, must be a HH, goes, okay, let's write this down, higher high. Okay, when the trend line is broken, it must be a higher high. So when you see the market breaking the downtrend line, because we are talking about the crown reversal, this is not a crown reversal, not yet, right? So number two, when the trend line is broken, must be a higher high. So now when the market closes, okay, with the high, now then we have number two. And remember, the market sometimes on every time frame, sometimes it's going to break the trend line and is going to make a higher high in a straight line, but sometimes the market is going to wave, and you are going to need 2 or 3 swings for the market to show you that has broken the previous high, right? And this is important, everybody. Why is that? Because you need to monitor or structure or the market wave, right? Not all the highs and the lows are relevant. In the end, number two is when the trend line is broken, must be a higher high. Okay, number three is tricky. Number three, look at past resistance. Okay, number four, draw a Fibonacci on crown or reversal. I'm going to explain to you, just be patient. Okay, look at past resistance. Why is that? In this example, okay, in this example, when the market is going to start to retrace, we want to look at past resistance. Where is past resistance? Well, past resistance is here. No, not support, resistance. Okay, and the level of the past resistance is here. So where is the crown? Well, the crown is forming right now, so this would be the left tip. Okay, let's color code this in white, yellow. This would be the left tip. Now here you have the center tip just forming. The market formed the center tip. Let's color code this in what? Violet. Okay, so number one, trend line break. Number two, when the trend line is broken, must be a higher high. Check, we have this. Hello Annie, how are you? 3, look at past resistance. Past resistance is here. Okay, now number 3, why is that? We are going to have different crown formations and crown reversals. Could be like this, you know, when the market is going to retrace exactly to past resistance, and this is going to be our entry point. Okay, sometimes the crown reversal is going to be a little bit ugly, meaning it's going to make a higher high, but it's going to make a deep retracement, and then is going to move up. Okay, this one is ugly for the beginner traders, you know. Oh, maybe, you know, false crown. No, just be patient. Okay, because in number 4 we are going to use the Fibonacci on the crown. Okay, I'm going to explain to you. So number 3, look at past resistance, and sometimes maybe during news events, okay, you are going to have a center tip, and then you are going to have a shallow retracement, and the market is going to shoot up. So when you check the number 3, okay, is for you to see and project more or less where the retracement is going to be. Stoyan is asking, what about monitoring the price retracing the past resistance, which is now support? What do you think, Stoyan? What do you think? Okay, everybody, so you have different behaviors, okay? Sometimes the left tip is going to equal the right tip of the crown. Man, I would be so glad if I can... Not sure if it's the ABC, let me see, 1, 2... No, this is not. Triangle also not, I believe. Triangle 1, so not this one. Maybe head and shoulders again. Yesterday I couldn't draw. Okay, so you can draw part of the crown with head and shoulders here, right? So, or it's going to be like this, right? Oh, I just need to connect. Nice. Finally, okay. Finally, I got it how to use. I need to connect the dots. Okay, let me do again the crown here. So I'm going to use the head and shoulders. I'm going to connect the high to a low, low to a high, high to a low, low to a high, high to a low, and low with the high on the crown. There you go. Crown reversal, right? Okay, so you have this where the left tip is equal to the center tip. You have this one where the left tip is up and the right shoulder, it's written, okay, no problem. Where the right tip is lower, we had deep retracement, and the last one we had the shallow, what's called the shallow retracement. So left tip, center tip, right tip, there you go. So you have 3 different behaviors, everybody. I think we have to keep an eye on how price is reacting there. Yes, sir, I agree. Now, number 4, everybody, is a little bit different. Okay, and then we are going to check CADJPY 4-hour chart, daily chart. Okay. Now, when we learned the Fibonacci's, right? We said that where is the A? The A is the first low, the A is the starting point, right? The A is the starting point of the trend. And what is the B? Where is the B? The B is the first high as soon as possible after the A. Okay? Now, when we are trading crowns, the Fibonacci is not going to go on the first low and the first high, but the Fibonacci is going to go on the crown or the crown reversal. What does this mean? This means that if in here, black arrow, if in here the market made 1, 2, 3 swings in order to make a higher high, in order to make a crown reversal, then we are not going to put our Fibonacci on the first swing. but we are going to put our Fibonacci on the crown, a reversal in this example. Okay, this is the difference when you are trading pure price movement, price action swings, and when you are trading the crown and crown reversal in this example. Okay, so those are different types, and the Fibonacci goes on the crown, so it would be here, and on the second one it would be here, right? And on the third one it would be here. Okay, and number 5, of course, number 5, enter according and enter according to the Fibonacci rules. Okay, and number 6, stop loss below the A. Okay, this is a rule. So when we are trading crowns, we don't have a choice. When we learned about just the Fibonacci's, we talked about that we can improve risk reward, or if we don't have enough capital, that we can improve our percentages if we put our stop loss below or above the C. When we are trading the Fibonacci crown, everybody, stop loss always below the A or above the A if it's a crown. Okay, this is a rule. No C's. Oh, but it's a confirmed C. I don't care. Stop loss below the A. Okay, this is go. And as always, right, you can listen to me, you know, or you can do whatever you want, but if you put your stop loss below the A, it's going to increase your probability of winning. Okay, any questions so far, everybody? Nothing special, right? Nothing too difficult. Easy stuff, right, for the beginner trader. No, I'm not going to go heavy on you today, no sir. I have a comment on the other platform that I'm streaming. You are not going to see this on YouTube, but somebody said, Passion, aren't you going heavy on us today? I said, no, today is Friday, you know. It's going to be an easy lesson. Okay. And homework, if everybody, again, you can accept what we are teaching you, you can reject, right? But if you are going to use crowns, homework, try to identify, try to see crowns and crown reversals on all time frames, especially the big one, the monthly, the weekly and the daily. Try to see them, because again, there is a learning curve attached for you to be able to spatially see what is happening in the market, you know. Okay, no questions, so let's open, everybody, CADJPY, right? CADJPY, and the monthly chart first, and next we're going to open CADJPY 4-hour chart. Just an example. Okay. Now, from the monthly chart, we already decided that we must be long term, and we have an up Fibonacci, you know, we have all the reasons to go up. So this is the upper band, this is the lower band, right? So the long term direction is up. Okay. And as a beginner trader, maybe we are not ready to trade retracements. We are not ready to trade the Fibonacci of the contrarian Fibonacci, right? So we said that we are going to wait. We are going to patiently wait, everybody, before we go long, right? I think daily is a nice example of this thing. At this moment, did I see the third correct? We are going to check any. Time to shine. Can you look at AUDJPY daily, please? Yes, sir. Okay. So CADJPY. We are going to compress the chart, everybody, and we are here right now. Okay. It's just an example. We are here. So where is our down trend line? Let me check. Our down trend line, it would be, so the long term it would be here, right? And in the meantime we have also the medium term downtrend lines, right? And the short term downtrend lines and the aggressive downtrend lines. Nonetheless, we are here right now. Okay, let's find a spot. So the market was making lower lows, lower highs, right? Lower lows, lower highs. We're okay. We are here right now, right? This is the downtrend line. We are passed over, and the market's okay. We are here right now. This is a nice example. Okay. So the market is moving, right? Moving, and we are monitoring the wave. Okay, we are monitoring the extension, retracement extension on the 4-hour chart. Okay, now we also need to monitor the trendline break. So let's color code this one like this and like this. Okay, so we have this trend line. Now we have the aggressive one starting somewhere from here, and we have one more if you want, right? Something like this. Okay, and we are monitoring the market. So let's wait, right? We are waiting and waiting, right? We are waiting, still waiting, and we are here. Okay, so the market broke this aggressive downtrend line, right? And we are monitoring the highs and the lows. So low, low to high, high to low, right? And we are staying in the market, still staying in the market, staying in the market, staying in the market, right? The market's moving sideways. We are staying in the market's moving sideways, and right, then we have another, right? Lower high, lower low. Okay, let's color code this in what? In red? Would be better, right? Let's color code this in red and change transparency. We need to see the highs and the lows. Okay, so this downtrend line is not relevant anymore. This downtrend line is not relevant anymore. We can extend this downtrend line, and we shouldn't break the highs and the lows. Okay, so this is the high, this is the low extension. Let me check just those two. I'm not sure which one is the highest. This high is 18185, 1803. So it's a lower high. Okay, there you go. It's a lower high. And still we are monitoring the market, monitoring the market, monitoring the market, monitoring the market, oops, and there we have, let me see, we're going to compress the chart, and now everybody, as you can see from the theory, right, sometimes we're going to have here the blue line, sometimes we're going to have more price swings, more, right, before the market makes a relevant higher high. So in this example, what's happening, right? The swings are this. So this is high, low, high, low, high, low, and finally a high, right? So the crown reversal would be this one in this example. Left tip, center tip. Okay, so okay, I'm going to leave it like this for the time being. Number one, trendline break. Do we have a trendline break? Number one, trendline break. We have it. So one, check. We have a trendline break, right? Not in here, but in here. Number two, when the trend line is broken, must be a higher high. So check, right? We have a higher high in here. Check. 3. Look at past resistance and draw a Fibonacci on a crown reversal. So past resistance, everybody, is here. So this is the left tip, and past resistance is here, as you can see. This would be the example. Okay, there you go. And let's draw a Fibonacci on the crown. So I'm not going to draw the Fibonacci here. This would be a mistake. I'm going to draw a Fibonacci on the crown. Okay, so this is now the Fibonacci. Okay, and let's see what is going to happen. Okay, the market is moving, right? I need to delete this one. Delete this one. Where is the Fibonacci? There you go. This is the Fibonacci. Okay, if you would enter at this counter trend line, just remember stop loss goes, it's a rule, stop loss goes below the A. This would be the stop loss. It's a rule when trading the crown and the Fibonacci together. So like this would be our stop loss. Hello Eddington, long time no see. Your downtrend line is cutting the end candles. Yes it does. Yes it does. Okay, so the market is moving up, 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 up. And let's wait let's wait. Okay. And now, when this happens, everybody, when we have the crown, we are trading the Fibonacci, right? So, if this would be the enter, this would be the risk, and this would be the reward up in here. So, not the best one, right? Maybe we are risking more than we are making. And let's see how the market is going to move, moving sideways. Okay, and again, now we are in the Fibonacci sequence. So this would be the another counter trend line, if it's going to happen, right? Okay, so we have also an entry here, if you want. And again, remember that the stop loss should go. See everybody what is happening. If you would put the stop loss in here, it would be stopped out right now. Fibonacci shouldn't be at the right leg of your central tip. Sorry. No, Miguel, this was what I was trying to explain to you. Sometimes, okay, number 4, everybody, the Fibonacci goes on the crown. Okay, it's not going to go on the first swing. Sometimes you are going to have left tip, center tip, but the center tip is not going to be a straight line. You are going to have a center tip like this, you know, before it's going to make the higher high. So this is the left high, and this is the higher high. So Miguel, again, the Fibonacci is not going to go in here. Okay, Miguel, can you see the picture? The Fibonacci goes on the crown, on the center tip. Okay? Or the right leg, I think it is, right? I know what is puzzling. So this is the crown, Miguel. Crown reversal. This is the left tip, is going to be here. And let's make it yellow. Okay, the center tip, Miguel, this is what is puzzling you. The center tip is this one. This is the center tip, the green. Okay, it's not the price swing, it's not the first swing. I have my Fibonacci, Miguel. My A is in here, first circle, and my B is up in here. If we are not trading crowns, then Fibs for the start of the trend will be as normal. Yes, sir. Yes, time to shine. You are correct. But many times, time to shine, when the crown appears, you are going to lose 1 or 2 Fibonacci's before the market starts to reverse. Okay, great. So we are here right now, right? The market is falling and we can draw another counter trend line, aggressive one. Okay. So let's see. This would be an entry, right? Now this one was not good enough, risk reward was bad. Okay, now this one, let's see, just graphically, everybody, just graphically, this is the risk. Now clone. Okay, it's not the best, right? Because we are almost 1 to 1. Time to shine. Sorry, what do you mean by that? Okay, I'm going to explain to you. Just let me finish here. Okay, so the market is moving up, and bam! Finally, everybody, we have a winning trade. Okay, the market hit the extension on the crown. Okay. Risk reward was not the best, but extremely important. When you put the Fibonacci on the crown, stop loss, never ever stop loss is not going to go above or below the C. Always below or above the A. This is a rule for crowns. Okay, and this is a great example. Here you would lose, here you would lose. And this one, okay, when finally took off, and again, a risk reward is not the best one, right? But this is just an example. Okay, what do I mean by that? A lot of times, time to shine, the market is making lower lows, lower highs, lower lows, lower highs, and then finally is going to make the first higher high, higher low, right? And you would trade, you would enter, right? I mean, you would have a down trendline break or whatever, and you would trade this Fibonacci, right? Maybe not the first one, but the second one. And many times the market loves to do this. Goes down, goes up, and then goes down and breaks the A of your Fibonacci. And then goes up again, you know, something like this, and you would put again here your Fibonacci maybe on this one, just an example, right? And the market would go down and break your Fibonacci again. Okay, and on the third time finally would go up and finally make the relevant higher high, which is the crown. Okay, so it happens many times that if you are going to trade just the plain Fibonacci, you are going to lose 1, 2 times, maybe 3 times, which if you would use the crown, you would be safe, and you would put the first Fibonacci would be like this, and stop loss below or above. Below, in this example, stop loss would be down here. Okay, time to shine. Did I answer your question? And remember everybody, I have a 20 seconds delay on the chat. MHB, how are you? Hello boss. I think the boss is in the chat room, but I don't know. Captain Yanis, are you there? No, I'm not the boss. You know. Yanis is the boss. Captain Yanis, but I think he left the... It's not that Elvis has left the building, Yanis has left the building, you know. Okay, time to shine. I have 20 seconds delay on the chat. Now this is CADJPY. Let's go on AUDJPY. AUDJPY. And then we are going to back on CADJPY daily chart, right? AUDJPY. Who was asking about AUDJPY? Ah yes, okay, great. Okay, what time frame do you want everybody? So AUDJPY, we are going to check the monthly chart first. Okay, this is the monthly chart, so this is the upper band, this is the lower band, and the long-term direction is down, right? Now I'm not sure what is happening in here everybody, but we as beginner traders, we want to short the market, and a crown reversal happened here. Okay, so we need to go where? We need to go to July 2016 on the 4-hour chart. July 2016. July 2016. Where is it? July 2016. July 2016. November, right? September, June, April, May, June, July. Let me check again. July 2016. Okay, great. So we want to short the market, right? And this is going to be a crown, not a crown reversal. So we are monitoring the market with the trend lines, right? Trend line, trend line, trend line again. You know, adjust the trend line. And we have different trend lines. We have the long-term trend line, the medium-term trend line, and finally everybody, we are here, right? Okay, if I'm not mistaken, more or less. There you go. Okay, so this will be the example on the AUDJPY 4-hour chart. Now, number one, trendline break, right? We have a trendline break. Check. Number two, when the trend line is broken, must be a higher high or a lower low, right? So we need to monitor now this is the trick. Okay, we said that not all highs and lows are relevant, so we need to monitor the market wave, right? Extension, retracement, extension. So let's go. Extension, retracement. Where is the next? Extension, retracement, extension. Okay, or if you want, you can do it also like this, no problem. Would be like this, right? But not to complicate too much the things. Extension, the market making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So this is all the extension. Okay, everybody. Now, knowing this, look how far, according to the crown rules, look how far the market should fall in order to break the relevant low of the market wave. Okay, now looking at the rules, when the trend line is broken, must be a higher high or a lower low in this example. Okay, so And if you are going to monitor the short-term trend, right, you're going to have this high, low, high, low, high, and lower low. Okay. Now, teacher, is this a crown? Well, it could be, right? It could be, but it also could be a false crown. Why is that? Because according to the rules, it must be a lower low on the structure, on the market wave. Okay. So, Passion, would you trade this? Well, yes, I would. Okay, I would trade this, but when you see this kind of stuff, everybody, just be aware that it's riskier. Okay, it's more risky. So maybe you have a smaller crown here, lower low. Okay, now Fibonacci number 3 goes on the crown, and stop loss above the A of the Fibonacci. Okay, now if this would be the case, we are going to monitor the market, counter trendline break, and again let's check. So this would be the risk somewhere in here, and this would be, I'm going to clone so I can see graphically at least, clone. Okay, so I would not enter in here, everybody, because I'm risking more than I'm making. Okay, so no trade for me. And let's see what is going to happen. The market's moving down. Okay, moving down, sideways, sideways, up, sideways, moving still sideways, up, still sideways. Okay, so I can monitor this price movement up here. This would be the counter trendline break of the crown. Okay, now let me check this one. I think it's even worse, right? So I would enter in here, counter trendline break. Again, no trade for us, at least for me. Risk reward is not worth it. So, and let me check. Let's compress the chart, moving sideways, up, bam, false crown, everybody. Can you see? We would be stopped out. Okay, this is why, everybody, number 2 and this picture is so important. Okay, not all highs and lows are relevant, and crown must be a higher high or a lower low must be on the market wave. Okay, so, and you have 2 protections. The protection number 1 is your Fibonacci, because even though I would enter in this trade, in theory, I would not enter because there is no good risk reward. Okay, so anyway, this was a false crown. So let's compress the chart. Let's compress the chart and let's move again with the market wave. Okay, so extension would be up in here right now. Okay, and we have again, right? We have again here left tip, center tip. Okay, and again the Fibonacci on the right tip of the crown. If this would be the case, this would be the counter trendline breaking here, and risk above the A, right? So it's going to be up in here. This is our risk. I'm going to clone this one. Okay, now this would be a trade worth taking because it's not the best, right? It's not the best, but at least we are earning 1.1, 1.2, and we are risking 1. Okay, now of course, building a strategy, right? What happened together with all the knowledge that we have, what happened here, this is called also a double top on the higher time frame. Okay, on the daily chart most likely is going to be a double top. Okay, but talking just about crowns, right? And talking about the market wave, you can adjust. Okay, you can do it like this, and retracement and extension, of course. So the next level that you would need to the market to break is going to be this one. Yes, MHB, it looks like double top. Okay, again everybody, you can short or go long the smaller crowns. Okay, just bear in mind that those are riskier. Okay, and if you don't like risk, everybody, and if you are a beginner trader, just go with the rules, wait for the market to, so we're going to see what is going to happen, and the market's moving. This is the area, this is the left tip right now of the bigger crown. So the market is moving sideways, up, sideways. Okay, finally the market hit the extension, and but still we don't have a lower low on the structural crown, only in here, everybody. Now this is the crown, this is the left tip, center tip, finally here, and the Fibonacci, everybody, goes on the crown. So this is now the crown Fibonacci. Okay, and stop loss goes up in here. Okay, so risk reward, let's compress the chart. The market is moving down, right, moving up. We are going to monitor the market with the counter trend line. So let's enter into the chart, monitoring the market moving up, right, and finally we have a counter trendline break in here. Okay, now let's compress the chart. Let's compress the chart. And again, this most likely is not going to be our trade, because risk and reward. So we are risking more than we are making. So no trade for us. No trade for us. And we are going to wait, right, to see what is happening, monitoring the market, monitoring the market, monitoring the market, monitoring the market. Okay, now we have here another opportunity. You know, the market's moving up, and let's compress the chart. Higher highs, still higher highs. Okay, still making higher highs until here, hopefully. Okay, let me compress the chart. Okay, so as you can see, everybody, we have another false crown. Okay, but Fibonacci protected us. We didn't enter into a trade because the risk reward was bad, and the market went back up again and broke. The smaller crown broke the bigger crown. Yes, it broke, yes, correct. Okay, so what we're going to do, we are going to monitor again. So left tip, center tip, maybe. You know, what's the time? Okay, so let's see how it's going to play out, everybody. Again, moving up, right, moving up, something like this, moving down, moving up, and there you go, we have another crown in here. Okay, so we have here left tip, center tip, lower tip. Let's color code this in violet. Let's wait for, I'm not sure about this one. Let me see. No, it's not a lower low, so this one would be a lower low. Okay. Now we have left tip, center tip. Okay, now Fibonacci goes on the crown. This is the Fibonacci. And let's monitor the market, right? The market's moving up, up, up. Counter trend line, hopefully. Moving up. There you go. This is our signal right now. Okay, so we have a crown. We have a Fibonacci on the crown, we have a counter trend line, we have a stop loss above the A. Finally, right? And also we have a smaller crown in here. Okay? I don't know, maybe it's going to be a false small crown, we don't know, but this is a signal to enter. Now, this would be an entry. This is a trade I would take with no problem. Okay, so this is my risk, clown, and this is my reward. Now, risk reward is very good. We are going to risk 1 to make, not sure if it take out the blue line. This is the blue line, just graphically. Okay, blue goes to blue. So this is a good entry according to the crown, according to the Fibonacci's. I'm going to risk 1 to get 2. Which is more likely to be a false crown, small or large crowns? There is no rule, Miguel. There is no rule. But the higher the crowns on the bigger time frames are more relevant than crowns on the smaller time frames. Meaning when you have a crown on the daily and you have a crown reversal on the 2-hour chart, guess which one is going to win? Time to shine. We can still draw contrarian fibs on the crown fib. Time to shine, I don't know. Okay, I have never done this, so I don't know what to tell you. But you can test this one. Okay, now let's see if this crown is going to pay out. The market moving up. And finally a winning trade, everybody. Bam. Nice, huh? And of course there is a lot of work attached to this. Everybody, if you can learn one thing from this lesson, which one is this? What do you think? We tried to enter 3 times. We have 2-3 crowns. All of them were false. We tried to enter 3 times on the crown on the Fibonacci. Okay, we didn't enter, and we finally found the 4th crown which paid out. Confusing but nice, yes, but what is the most important thing? Risk reward, yes, but I'm looking for a more general answer. Patience, yes, also. Boss, we start from 2016 and we got trade in 2010. All of you right, but I'm looking for a more general answer, everybody. Life is very short. Yes, it is. Okay, we need to finish the webinar. Everybody, the most important thing is we followed the rules. We followed the rules. We were starting in 2016 and we entered in 2018. And we followed the rules. We didn't mess with the strategy. We didn't enter where we shouldn't enter. Where the risk reward was not okay, we didn't enter. Okay, and this enabled us to stay out of the market. This allowed us not to lose money because we encountered 3 different crowns. Maybe I did some mistake on the market wave, I don't know, it's a possibility. But we always follow the rules. To the teeth. Trust education, yes sir. Okay, so the most important thing is not the crown, is not the Fibonacci. The most important thing is for you, everybody, to follow the rules. Okay, if the risk reward is not okay, don't enter. Okay everybody, happy Friday. See you back on Monday. Until Monday, stay strong and train your crowns with passion. This is FXPassion signing off.